Okay, welcome back. Let's just take a quick look at what the SGX is doing. 9 minutes to go for the pre-open session. Pre-open session, SGX is indicating absolutely flat kind of start. Stuck in a range and not really refusing to break out either higher or lower. That's been the story this year so far. But I have to say, given all of the selling we've seen, and it's now $1.5 billion plus from foreigners, like 22, the damage, at least on the index level, has not been all that great. Stocks, of course, is a different story. But Anuj is here with the trade setup as he sees it. Anuj, hi, morning.
Morning, Prashant. So, we discussed the game of ping pong, and I think it's still continuing. And if you watch two good Chinese players play, it's really, requires a smash of a different level to win that match. And what's happening here is that the market is respecting both sides of the range. It's testing the upper side, is failing there. It goes to the lower side, it fails there. But the decline in Indian market is mostly on its own weight. One thing which has happened, though, is that if you see yesterday's chart as well, the Nifty IT versus Nifty Bank. Nifty IT gained intraday, closed at the highest point. Nifty Bank fell 500 points intraday, closed at the lows of the day. And this month, Nifty IT is up 2.5%, and Bank Nifty is down 2%. So there's relative outperformance. And Nifty once again fell from the 20-day exponential moving average. And Bank Nifty, despite the good numbers from HDFC Bank, could not really do well. So the leadership is with IT and metals. Now, if you look at the numbers on the Nifty, the moving averages, they are declining, obviously. So the most important levels that I'll be watching out for are the 10 and 20-day moving averages, which are placed at 17,958 and 18,077. My sense is that the market attempts one more rally here, and especially if 17,800 is protected. The risk reward is in your favor today to attempt a long trade, just as it was in your favor to attempt a short trade yesterday, provided 17,800 holds on closing basis. Bank Nifty, though, is clearly now a sell-on rally. Because the way HDFC Bank behaved and the way ICICI Bank has been weakening and has moved within 40 rupees of 200-day moving average, there's been clearly a subtle change of leadership this month from banks to IT. And my sense is that it could continue for some time.
I have a follow-up there, because I was just thinking about how ICICI Bank's numbers are on Saturday. So do you think that, generally, for the last few quarters, ICICI Bank has outperformed, delivered stellar numbers. Do you think it could change the fortunes of the bank?
My sense is that even with HDFC Bank, it was not about numbers. HDFC Bank's numbers, you could not complain nothing about the numbers. It's about, the call that you've taken on whether as a sector banks will do well or as a sector IT will do better. And what has happened is backward-looking numbers, whether going forward, especially in case of HDFC Bank, how will the integration play out? And that's why yesterday's price action was purely reflective of that. I think what's happening on ICICI Bank is, and from the evidence or the chatter that we get, is that maybe one or two large FIs have taken a call. ICICI Bank has been a leader for 3 years, and in 3 years, it's massively re-rated. It's just some money being taken off, Sonia. I think one or two large FIs are just taking some money off in ICICI Bank. And I think purely in terms of the Bank Nifty, the leadership is still with ICICI Bank, despite the recent decline.
All right, Anuj, I've hit the nail on the head, I think, so on that one in the last